Okay, good afternoon, everyone. My name is John T. Sachs. I think you'd quickly notice that I'm not the man in the picture. And Doni Nicolau, who's one of our crypto experts, came down with the flu today. So I'm taking his place. I've done this before, so you've got nothing to worry about. I know and understand the content relatively well. Definitely not on Doni's level, but I think you'll get a lot out of it. The webinar won't be an hour. So what I have done is, if you haven't participated or partaken in our part one crypto webinar, I will cover some of that information at the end. And if you have been part of it, well, then you're just welcome to log off. If you do have questions, the simplest thing to do is, you'll see there's a chat option. You can insert your question there. At the end of this part two, I'll go through some of your questions and answer them. And then I will also then proceed to part one of our webinars. This is supposed to be informal, so you've got questions, please, send them through. Again, my name is John T. Sachs. I'm one of the partners at Geltech, and I see a lot of people are coming in at the moment, over 150 plus registered. So we're getting to that number quickly. So if you've got any questions, please shoot them through. And as I mentioned, Doni has fallen ill, so I'm taking over his position. So what we're also doing, and if I could really get your assistance on this, is we'll drop through a link. We're doing a huge survey. We've had hundreds of people participate. You'll see it in the chat section. If you wouldn't mind completing our survey, it'll take you literally 45 seconds. It's 10 short questions, and we'll send you through a report on the alternative investment market in South Africa once you've completed the survey. So please do participate and assist us in getting this information. So if you are a cryptocurrency investor or a potential investor, you would have experienced in the last 24 hours a huge sell-off in the market, but this sell-off has really been occurring since December, mostly from January, and we've really seen the markets come off significantly from their all-time high in November. To put things into perspective, Bitcoin was R1 million in November, and right now it's at 328,000 Rand. So that's close to 700,000 Rand in sell-offs. Well, cryptocurrency is definitely not alone, and let me give you a kind of a sense of what is really going on from a macro perspective in the market. During COVID, governments, particularly the US, printed a lot of money, stimulated their market, gave a lot of their citizens a lot of cash. We then had supply chain issues as a result of COVID, and we're still having that issue in, for example, China, where they're still under lockdown. That plus the Russia-Ukraine fiasco has really caused significant pressure, particularly when it comes to inflation. And globally, you have read and heard, inflation numbers are really, really high. And really, governments have very little they can do around inflation other than increase interest rates. Now, what happens when you increase interest rates? It really makes bonds and cash deposits really more attractive for investors, because they're getting a much higher return, where the risks of investing money or depositing money in an interest-bearing account or buying a bond is much, much lower. So a lot of money leaves risky investments and goes into more safe haven investments, particularly during turbulent times. And as a result, your riskier investments really, really suffer as a consequence. And I'm going to give you a couple of examples. So if you have a look at the screen, the Dow this year has been its worst start since 1962. As of today, Nike's down 43% for the year. JP Morgan's down 18%. Walt Disney's down 36%. Hallmark is down 28%. On the NASDAQ, it's had its worst start ever. Apple's down 23%. Microsoft's down 31%. Amazon 47%. Tesla's 52%. And I didn't include Meta, which is down 70% year to date. And why? Because a lot of these investments are tech stocks. Tech stocks are regarded as much higher risk in relation to commodity stocks. And as a consequence, they're really the first to see investors fly to safer havens. And cryptocurrencies haven't been ignored either. They're also high risk. And we've seen Bitcoin with its recent sell-off at 57% down for the year, Ethereum 62% down, and 33% for Binance Coin. Now, what is important to really conceptualize is if cryptocurrencies alone had these huge sell-off and the rest of the market continued to grow or was static, then there would be questions around the long-term sustainability of cryptocurrencies and around their volatility. But as you can see from the previous slides, all high-risk investments have really taken a lot of pain during the last 6 months plus. So what we are seeing for the first time is a real correlation between cryptocurrency investments and other high-risk investments. So as interest rates go up, we'll see cryptocurrencies and other high-risk asset classes go down. And what we did see last week with the US inflation increase of 0.75%, there was some dovish remarks by the Fed indicating that potentially the next rate hike might not be as high. We then saw a huge increase in the cryptocurrency market. The market really ran unbelievably well until yesterday. And what happened yesterday? Well, one of the biggest exchanges in the world, FTX, called for help. There's clearly some issues from a liquidity perspective, from a solvency perspective, and it appears that Binance, one of the biggest cryptocurrency exchanges in the world, is looking to acquire them, but they're at very early stages. And as a result, FTX clients are really running for the hills, and they're selling cryptos or they're moving their cryptos. And as a result, we are seeing an enormous sell-off. And if I look at my phone at the moment, just to the last 24 hours, Ethereum is down 17%, Bitcoin is down just under 9%, and XRP is down around 16% over the last 24 hours. So it is a turbulent time and a very volatile asset class. Again, for those of you who have just joined, if you have any questions, please post them in the chat block. At the end of this part, I will answer the questions. I'm pretty sure that our part 2 webinar will be much less than an hour, probably be around half an hour. And what I'll do after the questions is I'll move on to part 1. So if you weren't part of our first series of cryptocurrency introductory webinars, I'll take you through some of those slides. And if you were part of it, you're welcome then just to leave. So for me, what's really exciting and really the main reason why I'm an investor in the cryptocurrency market is because of adoption. What I mean by adoption? Well, I mean the amount of people, companies that are entering into this market, and they are entering at a rapid rate. And the next couple of slides, I'm going to really illustrate to you what is really happening under the hood, which a lot of investors are really just fixated on the volatility of cryptocurrencies. And they're not really in or have their boots on the ground in terms of understanding what's happening at really the foundations or grassroots in the cryptocurrency market. So from a macro perspective, the trends globally for many years has been a move to digitization. We are seeing the likes of Amazon really growing into a significant business in South Africa. We're seeing Pick n Pay, Checkers, 360, Woolworths, all going onto apps. I, for one, I don't go to Pick n Pay anymore. I'll order products online and it gets delivered to my house. But that's just a clear sign that it's moving to the digital world. Entertainment, long are the days of Blockbuster or renting movies. Netflix, Disney is really all online, digitized. Social media has been a trend for many years now. TikTok is really taking a significant position in this market. But again, move to digitalization is where everything is going. And particularly in the information and news sphere, a lot of people on Twitter because they can get the latest news instantly. And as you can see, this trend has moved in a lot of areas, and now it's moving in terms of finance. What we are seeing is a lot of businesses, particularly in the banking sector, looking at blockchain, looking at ways that they can introduce a payment system over the blockchain because there are lots of efficiencies. For example, it's much cheaper, quicker, it's 365 days a year, really not restricted yet by borders, which is a pro and a con. But there's a lot of movement in this space, and I think that the next couple of slides will really give you a feel as to why you should be considering cryptocurrencies now, because we are still at the early stage of adoption. So In the cryptocurrency market, there are a number of blockchain networks, which are really the infrastructure which cryptocurrencies work off. And these blockchain networks are already generating huge amount of revenue because the users of these blockchain networks need to pay a fee to transact. Similarly, if you transfer money outside of South Africa and you use, you'll have to use SWIFT, which is the exchange between banks, and you pay a fee. I think it's roughly 400 Rand. Well, similarly in the blockchain network, if you transact, you're paying a fee, and as you can see, the rolling average, the amount of revenue generated by Ethereum over a 180-day period is $2.7 billion. This is not a small amount of money. There's a huge amount of money being generated on this network. And there are other players in the cryptocurrency blockchain environment that are also generating huge amounts of revenue. As you can see, Looks Rare, over $500 million in revenue. OpenSea, $362 million of revenue. So these businesses or blockchains are really starting to see a significant amount of users using them and paying a fee for the service that they wanted. What is also interesting to see is the number of actual transactions occurring on the various blockchain networks. And I've chosen Ethereum. Yes, they are the biggest by far in the market, but what we're seeing in the Ethereum network is roughly 1.2 million transactions a day. So these are businesses, these are people that are transacting on the Ethereum network. They might be buying an NFT, they might be sending Ethereum to a family member somewhere around the world. But 1.2 million people are transacting with Ethereum on a daily basis. In the Bitcoin world, as Bitcoin has become more mainstream, we've seen a huge amount of number of people that are opening Bitcoin wallets or addresses, and you can see the number has just grown exponentially over the years and has already exceeded 1 billion addresses. So that's a huge amount of people that are already entering into the Bitcoin environment for many reasons, whether they think it's a good investment opportunity or for purposes of transacting. We're also seeing countries adopting cryptocurrencies, and if you have a look just per continent, Africa is really up there, and that's probably because of lack of infrastructure and exchange control limitations. Just an interesting map, the number of Bitcoin ATMs popping up around the world. If you've been to Mara's Arch, you would have seen there's one in Mara's Arch, there's one in Saturn City. I've never used one of these, but there's obviously a demand and a need. Where things are getting really exciting for me is companies that are starting to introduce blockchain and cryptocurrencies into the way that they do business. And this is really where the likes of Ethereum, Solana, and the other blockchains are really going to see a huge amount of adoption. And what I mean by this is, if, for example, Emirates is going to allow users to transact with a cryptocurrency on their platform. So in other words, you could use Ethereum to pay for a flight, or maybe Emirates is going to introduce their own cryptocurrency. A lot of these businesses will have to use another blockchain network as the infrastructure to do these type of transactions. And the more companies that start using a particular blockchain, the more users will have to use it, the more fees will have to be paid, and the bigger the network will grow. So if you don't believe in a digital currency like Bitcoin or others, the blockchain infrastructure that really underlies the cryptocurrency ecosystem is really what is holding it up, and what companies are going to be tapping into in order to be able to offer a cryptocurrency solution in their business. We're also seeing the likes of Visa, which will allow people to transact or settle via cryptocurrencies. There's news that with Elon Musk's purchase of Twitter, that Dogecoin will be the that Dogecoin, I've just been load shed, apologies for that. That Dogecoin will be the means of transaction in South Africa. Sorry, I want to just make sure that my network connection is right. One of the unfortunate gripes of living in South Africa. Okay, my power is now back on. Sorry about that. As I was saying, Twitter, with Elon Musk's purchase, will be using Dogecoin potentially as a means of transacting on their network, which is quite exciting. So on the one hand, we've got adoption, and we've got companies, people starting to transact, and really this will push the price up of cryptocurrencies. As more and more people use it, the demand for a particular good or service increases, therefore increasing the price. The second area where I think that cryptocurrencies are really going to take off is around regulations. Now, if you read the news, about a month ago, the FSCA announced that they will be regulating cryptocurrencies as a financial asset. We are having a webinar on this subject, which will be presented by Professor Angela Etzakovitz. There'll also be a segment on tax, which will be presented by Mazars. This is on the 17th of November. If you want to hear everything there is to know about what's happening in the space from a regulatory and tax perspective, please go onto our website, register for the event. If you can't make the 17th, register anyway, and we'll send you the video. But effectively, the FSCA has announced that cryptocurrencies will be regulated as financial assets. And what this really means is that financial advisors, if and when they obtain the necessary license, will be able to advise their clients on cryptocurrency investing. What really excites me is that this will really allow the banks who already service in South Africa hundreds of millions of people to allow cryptocurrency access to cryptocurrencies at a flick of the switch. And I understand all the banks are in the process of coming up with solutions, looking at investment products for their clients. And I think when regulations do come in globally, all the banks will be able to offer cryptocurrencies to billions of people in a really short period of time. And my view is investing into this market pre-regulations is really a once-in-a-lifetime opportunity, because once this asset class is regulated globally, billions of people will have access to it, and I think that'll have a massive impact on the value of cryptocurrencies. But that's my personal opinion. What's happening globally on a regulatory perspective? Many first world countries have made announcements around cryptocurrency regulations. Other than South Africa, the most recent is the EU and the UK. They're making huge strides, and we think they'll be one of the first to regulate this cryptocurrency. The UK are trying to position themselves as the hub for cryptocurrencies. So, when a first world country like the UK and America adopts cryptocurrencies, you'll see many, many other countries follow suit. This is just talking to my point earlier. Once it is regulated, we'll see the likes of Morgan Stanley, JP Morgan, Goldman Sachs, all offering cryptocurrencies to their clients. And it's no secret, these big banks have already invested billions of dollars into various cryptocurrency exchanges or platforms to really offer this product or investment class to their clients when it's regulated. Okay. Now moving on to a little bit more technical aspect of cryptocurrencies. I see more people are joining. In the next couple of slides, we'll be done with part 2 of the webinars. I'll look at the questions. If anyone has questions, please add your questions in the Q&A section. I'll then move on to part 2 of our part 1 of our cryptocurrency webinar series. For those who haven't been involved in part 1, if you have, you're welcome to leave. If you'd like to stay, by all means, you can stick around. So stablecoins, you may have heard about them. They were in the news for the wrong reasons about 6 months ago. And what are they? Well, stablecoins is a cryptocurrency which is pegged to an asset, for example, the dollar. And why they were created is because they were a means of transaction. So in a cryptocurrency which is less volatile. Let me try to put that in English. If I enter into an agreement with you where I say I'll pay you in 1 Bitcoin in a week's time, the price difference in a week could be significant. As I mentioned to you in the last 24 hours, the price difference is 9%. So what many people would do is instead of agreeing on the form of payment being Bitcoin, they may say, let's do a stablecoin which is pegged or linked to the dollar, and there effectively you're taking dollar risk. But there are two types of stablecoins. You've got on the right hand side of the screen, your asset-backed stablecoin, and these are stablecoins which are linked to physical assets. It could be property, it could be the dollar, gold, you name it. The creators of these stablecoins can decide. The algorithmic stablecoins are stablecoins which are not controlled by a committee or a company, but are really put together through an algorithm. And this algorithm will determine which type of assets need to be purchased in order to make sure that it maintains its peg and maintains volatility. There were algorithmic stablecoins were in the news 6 months ago on a negative light because Luna Terra, which is a stable algorithmic stablecoin, lost its peg. And what this means is it is no longer pegged 1-to-1 to the dollar. There was a huge price differential, and as a result, the crypto coin completely crashed, and holders of that stable coin lost everything. It literally went down close to 100% in a very, very short period of time. So these are really fallen out of favor. The asset-backed stable coins are very, very popular. There's billions of dollars in investments into these, and I think mostly because people want to either transact with stable coins, or during volatile times they'll sell their Bitcoin, buy a stable coin, wait for the market to turn, convert their stable coin back into Bitcoin. This amongst other uses for stable coins. Next up is cryptocurrency storage solutions. So for many of you that hold cryptocurrencies, you probably have a Luna account or Valor or Binance or FTX, etc., etc., etc. And many people, it's just simple. They upload fiat currency or rand or dollar onto an exchange, and they buy Bitcoin or any other cryptocurrency, and they hold it on their exchange wallet. But this is perceived as being one of the highest risk places to keep your cryptocurrencies. Why? Because hackers, all they need to do is get through the security layers in an exchange, and they can access billions of dollars in cryptocurrencies. And what you'll see on this slide is that this is not a new event. This happens. This has been happening frequently. I think 2022 has been the worst year for hacks. Billions of dollars in cryptocurrencies have been stolen. So what are investors' alternative options? Well, they can do a hard wallet. A hard wallet is similar to a USB, where they'll plug the hard wallet into their computer, they'll transfer the cryptocurrencies on the hard wallet, and that is then safe from being hacked. It has its own perils. You could lose the hard wallet, it could become corrupt, you could pass away, and your spouse or family member might not know what this device is. Another option is a paper wallet, where you can write down the code, because what is cryptocurrency is really a long code. You could write the code down, but again, that could get lost, it could get damaged. Same scenario, if God forbid something happens to you, your family members won't have a clue what the code is. The fourth option, and at Geltic we're a bit biased around this option, is handing over the custody of your cryptocurrencies to a third party who specialize in doing this. And there are lots of benefits of doing this. Is that this is what this company does, and the downside is obviously that there's a cost. The upside is you don't need a password to use it, but I'll go through a couple of these points in a slide or two to come. But they all have different risk and convenience metrics. Paper wallet is extremely secure, but it's not really convenient. If you want to sell your cryptocurrencies, you need to go type it out. You can also lose it. Exchanges are very convenient, but really, really, in my view, unsafe. Hardware wallets and custodians, similar. but from a convenience perspective, hardware wallets are the least convenient. And you need to have a strong technical understanding of this. There are a few similarities, but what you'll see from the third-party custodian is that it's really most of the cryptocurrencies is stored offline or off an exchange, really. It requires multi-parties to sign if a cryptocurrency is going to be withdrawn. And that really eliminates risks like we've had with MTI and AfriCrypt in South Africa, where the fund manager raised a lot of money to buy Bitcoin and then took the Bitcoin and fled to Tanzania and Brazil. With where multi-party signatures are required, you're then saying, I'm spreading my risk across multiple parties. They all need to collude. At Joltec, we have an independent party which needs to sign. So there's some form of independence, but there's always a risk. And then from an estate planning perspective, the nice thing about third-party custodianship is that, heaven forbid you pass away, your spouse or your financial advisor can get hold of the custodian and access the cryptocurrencies relatively easy. For those of you who joined late, there is a link in the Q&A. The link is to an alternative investment survey. We annually produce an alternative investment report. It's got really rich information. If you fill out our survey, you'll stand a chance of winning one of 10 Take-A-Lot vouchers, and you'll receive a free copy of the report. So really, I would love 45 seconds of your time, if you wouldn't mind clicking the link and completing the survey. I'm going to stop here for questions, and then I'll give you some insight into what we do, and then I'll start part one of the webinars, but I'll let you know before I do that. So give me a second just to read some of these questions. The first question is, how long before banks start offering cryptocurrencies, particularly in South Africa, the likes of FNB? So banks are already in discussions with various players. We've met with most of the banks. Banks are looking to offer all types of services in this market. They won't do it until it's fully regulated. So right now, the FSCA have said that cryptocurrencies is now defined as a financial asset. They haven't given the exact regulations. That'll happen probably July to the later part of next year. Once it does occur, the banks will understand the environment much better, and they'll be able to offer it to their clients. So my expectation is in Q1 of 2024 will be when the banks are really running hard with cryptocurrencies. And the next question is, how is Luno as a cryptocurrency platform or an exchange? I'm not too familiar with Luno, but from their marketing information that I have seen in the market, they've got over 8 million people globally, and they're in a number of countries. So it appears to be a reputable exchange. But as I mentioned earlier, I don't really believe in leaving your cryptocurrencies on an exchange, because if you get hacked, or if the exchange gets hacked, well, then you lose all your cryptocurrencies and have little to no recourse. Next question is, what is my view on earning interest on cryptocurrencies? I think it's a great opportunity, and let me explain it to you. So right now, what you could do is, if you hold most cryptocurrencies, you could deposit those cryptocurrencies on various platforms. Those platforms will then use that as security and then provide other people with loans. Now, I'm not explaining this really well. What happens is you deposit your cryptocurrencies, for example, like a bank. When you deposit your cash, you can deposit your crypto with a platform, and they will then lend out the crypto or use it as security and pay you an interest rate. And some of these interest rates, although they are quite variable on a day-to-day basis, can be as high as 15% per year. So if you want to buy a US pegged stablecoin and deposit it on these platforms, you might be earning 5 or 6% in dollar terms, which is really, really high. You won't get that anywhere in the market. There is some risk involved, but the large protocols that offer this, like Aave, they've got over $50 billion in deposits. huge sums of money, they are perceived as being relatively safe. And I think it's a nice way of earning additional interest with your cryptocurrencies. But you need to really have a good understanding of what you're doing. There's one question around a blockchain called QIE. I'm unfamiliar with them, so I can't really comment. A couple more questions that I want to just see. I think that's it for the questions. Okay, so I'll continue monitoring the questions. If there are any, I'll try and answer them. To repeat myself again, what I'm going to do is in a minute, I will take you through a few of the slides of part 1 of our cryptocurrency webinars, really some insightful information on what is blockchain, what different types of cryptocurrencies. So if you want to stick around, by all means, you're welcome to stick around. If you don't, that's also fine. Just to give you a 30-second overview of what we do at Geltec in the cryptocurrency space. So we've got 2 cryptocurrency investments. They are both baskets. The one is our cryptocurrency basket where we have 9 cryptocurrencies. These cryptocurrencies across 3 themes: digital currency, so we've got Bitcoin and we've got Litecoin, across blockchain cryptocurrencies like Ethereum, Solana, and then across DeFi or decentralized financial cryptos of the likes of Aave, Uniswap, Chainlink, etc. But there are 9 cryptocurrencies. Our second basket is a blockchain technology basket. Here, investors get exposure to really the blockchain ecosystem. But what is exciting about both of these baskets is we've got 3 full-time cryptocurrency experts. I'm not one of them. In our business, they manage these baskets. If there's a cryptocurrency that is underperforming, has a security issue, we can remove it from the basket. If there's a new cryptocurrency that's doing really well and it meets our criteria, we'll add it to the basket. But effectively, we're offering a managed solution in the cryptocurrency space. The baskets have performed with the market, which is not positive, but it is potentially a good opportunity to enter the space given where cryptocurrencies are at the moment. I personally invested more yesterday into the market. Unfortunately for me, had I invested today, it would have been at a 10% discount, but that is the nature of this market. So those are 2 cryptocurrency baskets. Information on the baskets are on our website. If you currently hold cryptocurrencies on any of the exchanges and you would rather remove it and deposit with a custodian, we offer custodian services. We've done a partnership with a company called Fireblocks. We think are the world's biggest and most sophisticated and secure cryptocurrency storage solution. We partnered with them in South Africa. As a normal person, you won't be able to do business with them. You need to be on an institutional level. And we store clients' cryptocurrencies. We've got 2 options. Option 1 is when an independent party has to approve any withdrawal. That'll give you some sense of mind that you're not taking pure Geltec risk. Another option is, you feel that we're trustworthy and, you don't need a third party to approve it. There is a cost involved if there is a third party approval required. Again, information on our website. I see as another question. So Kevin's asked, how can financial advisors partner with Geltec in offering clients crypto products and services? Most of our investments are through financial advisors at the moment. Advisors really refer clients to us because they can't really advise on cryptocurrencies. So myself or one of the guys in my team will sit with the client, take the client through the product, and really sign the client up. And that's typically how it's working. And, if you want more information on it, my email address is over here, jonty@geltec.co.za. But we'll send you these slides and the recording of today probably early next week. So you'll have that information. So I'm moving on to part 2. Part 1, if you weren't part of it, you're welcome to stay. If you were and you want to go, you're welcome to No Hard Feelings. And I'll probably speak for another 13 minutes or so. So the first topic is, what is blockchain? Now, blockchain is a network. Think about it as if you're working in a corporate, all your peers would be on the same internal discovery network or momentum network, and you'll be able to chat and communicate and pass information within your ecosystem. Well, that's similar in the blockchain environment. But the difference is at your work, there's a server, a centralized server, there's a CEO, there's a chief technical officer, and they really make all the decisions, and they can control. They can prevent you from sending information. They can switch off your computer. They can go into your computer and change information, and they really have control. In the blockchain environment, it's every participant independently records every single transaction on the network. Okay. Why that's important is this prevents fraud. It prevents one decision maker making all the decisions. And we have that in the case of the South African Reserve Bank as another example. The different participants on the Reserve Bank's network are all the banks, and the Reserve Bank calls the shots, makes the decisions, and the banks, by and large, need to listen to it. Now, if a business wanted to use blockchain, I'm going to give you an example of how that would work and try and articulate the importance of this type of network in everyday life. So let's assume Postnet, and if you're not from South Africa, DHL, let's assume Postnet decides that they want to be on, they want all their logistics saved on the blockchain. How this would work is quite simple. I'm the sender, I go to Pretoria, I drop off a box. That box is now destined for Cape Town. What happens when I deposit the box at Pretoria? Pretoria, along with every single branch, Bloem, Johannesburg, George, Cape Town, records that John T. Sachs has dropped a 1 kilogram box destined for Joe Schmo in Cape Town. Then along comes the driver, picks up the box. Immediately across the entire network, delivery man X has collected John T's box destined for Cape Town for Joe Schmo. He then drives to Johannesburg, and he picks up more parcels. And when he arrives in Johannesburg, simultaneously across all the networks record that John T's parcel has now arrived in Johannesburg. Same with Bloem, the same with George, and eventually in Cape Town. Why this is important is it prevents the branch managers in any of the jurisdictions to falsify the records and say, hey, this never happened. And it prevents the driver from denying that the parcel was ever with him. And from a logistics perspective, this is really important. You can fully understand, manage the flow of goods. This is a real world example. And there is a blockchain or cryptocurrency token focused at logistics called VeChain, and they've partnered with the likes of BMW and other service providers who are transporting goods around the world, and they're really giving these businesses a way of really managing where their goods are, at any point in time. Cool. So where does blockchain fit in? Well, blockchain is really the infrastructure. So let's use Microsoft as an example. In your business today, you and your staff probably use Microsoft, and it is the infrastructure you use to produce invoices, email people. That is similar to what's happening in the cryptocurrency ecosystem. You've got your infrastructure, which is your blockchain, which is your network, and on top of it, businesses plug into this infrastructure to be able to do all types of things. For example, Postnet would be the circle on the top here where the large capital A is. Postnet's image or logo would appear there, because they would build their solution on top of a blockchain like Ethereum, which is the triangle or the star that you're seeing, diamond that you're seeing at the bottom of the screen. So blockchain is really the infrastructure used in the cryptocurrency market. So I see there's a question, so let me pop to it quickly. someone's asking if they bought a blockchain cryptocurrency or a cryptocurrency, could they store it in Geltic's cryptocurrency safety deposit box? Absolutely. We can store over 1,000 different types of cryptocurrencies. So where are the investment opportunities? And I really love this next slide, because when you talk cryptocurrencies to the average person, what do they think about? They think about Bitcoin. But that is just a significant player in a huge world. I think there are over 16,000 cryptocurrencies at the moment, but they fall in different type of categories. So you've got your digital currency, Bitcoin. Ethereum is not 100% correct here. Bitcoin, Binance, Litecoin, the stable coins, and these are used to transact. People use them to pay each other. Some would argue that Bitcoin is really used as an investment because it's a store of value, but that's a different debate. You've got cryptocurrencies which are linked to games, okay, or to the metaverse. For example, Decentraland is a cryptocurrency that you'd use in one of these metaverses. VeChain at the bottom is used in a supply chain. It's a supply chain cryptocurrency. You got decentralized or DeFi cryptocurrencies, etc. So there's really a world of different categories of cryptocurrencies which people need to understand if they are looking to invest into the alternative cryptocurrencies other than Bitcoin or Ethereum. So I mentioned you got your digital currencies. So those are Bitcoin or a stable coin or any of the other coins. And why have they really come to life? Well, because they're an alternative to fiat currency. So fiat currency, rand or dollar. The cryptocurrencies are scarce. So I think there are only 21 million Bitcoins ever to be mined. And what this means is that a reserve bank can't go and just print more Bitcoin like they can the dollar. So from an inflation perspective, less likely for there to be inflation in Bitcoin as an example. They're very divisible. You can divide a Bitcoin into thousands of Satoshi. Easy to transport, and they can be transported 24 hours a day at a much lower cost at an extremely rapid rate. Take the banks, for instance. If today's Friday and I need to send money to a family member in America, it's not going to go out today. The weekend, the banks aren't operating. The money will probably only land in the bank account on Tuesday. Not the case in the crypto space. It'll take a couple of seconds. Depending on the network you use, it might even take a minute. And again, the characteristics of digital currency is you can recognize it. It's durable. It's not going to fade away. And most importantly, it's decentralized. As I mentioned earlier, banks can't just go and make decisions, or the Reserve Bank can't go and make decisions and print more cryptocurrencies. I see a couple more questions are popping in, and I'll just do. I think I'm mistaken. This chart is just showing you really the adoption rate or the market price of Bitcoin and Ethereum, over the last 10 or so years. This is a comparison to Bitcoin, which is in the orange, versus gold, which you can barely see, which versus the JC, which is you cannot see, and some of the largest investments are in America, like Amazon, Tesla. You can see that Bitcoin has really outperformed these significantly over the last 5 years. So the first type of cryptocurrency that I spoke about is digital currency. The second is utility tokens. So utility tokens are cryptocurrencies that are used on a blockchain network. So if I transact on the Ethereum network, I need to buy Ether because Ether is the form of currency I use to pay for the Ethereum network. As more and more companies start using the Ethereum network, users will have to directly or indirectly pay in Ether. More and more users that are paying in Ether, the price of Ethereum will go up. And this again talks to adoption, which I discussed earlier. There are a number of cryptocurrency blockchains in the market: Ethereum, Polkadot, Cardano, all of these have their own, what we call a native token, and this token is used to pay for the service of transacting on their network. So if you are a believer in blockchain, then you should hold some, or you know, a number of blockchain tokens, because over time there'll be a specific amount of blockchains that will really get the most amount of adoption. And at the moment, Ethereum is leading the charge by far, followed by Solana and others. This slide is a couple of months old, but at that time, the Ethereum's market cap far exceeded JP Morgan, Bank of America, Wells Fargo, etc. And the Ethereum blockchain it's a beast. It's a huge network, generating, as I showed you earlier, $2.7 billion in a period of 180 days. So I discussed digital currency as a crypto, utility tokens as a crypto, and then thirdly is protocols. Now, protocols are businesses which use the blockchain. Now, if you want to transact with these businesses, so for example, Postnet, if you wanted to transact with Postnet on their blockchain, you'd have to pay in a Postnet crypto. The same with any protocols. So if you want to deposit your crypto on Aave, which is effectively a decentralized bank, all interest payments received or paid need to be paid in Aave. So the more people using Aave, the more people have to buy Aave's token, which will drive the price of Aave up. And at the time of these slides, which are, forgive me, a couple of months old, the total amount of deposits in Aave was 225 billion rand, and its market cap was 240 billion. Uniswap's another example of a protocol. This is an exchange, like think of the JSE, where if you have Bitcoin and you need to get Aave because you're going to do a transaction with Aave, it's just an exchange where you can get Aave tokens really quickly, seamlessly. And this is really ballooned into a huge decentralized business. Now, what I love about these protocols is, you know, even with a deposit of 225 billion rand and Uniswap having a market cap of 64 billion, these protocols employ 0 people. It's a code, it's set up, it's been tested, and once it's running, it runs, and it doesn't need any human interference.